Can a US company pay Canadian employees in USD? The core legal question. A US company can often pay Canadian employees in US dollars, but doing so does not free it from Canadian rules. The law cares about whether Canadian employees receive at least the minimum pay and entitlements in their province expressed in Canadian dollars. Paying in USD is mainly a practical and contractual question, not an escape hatch from local standards. If the Canadian dollar value of what you pay in USD falls below provincial minimum wage or undermines overtime and holiday rules, your pay practice becomes a compliance problem, even if everyone seemed happy when the offer was made. Canadian standards are measured in CAD. Canadian employment standards legislation sets minimum wage, overtime rates, vacation pay, and certain other amounts in Canadian dollars. When you agree to pay someone in USD, you are still judged against those Canadian dollar thresholds. That means your payroll process needs a reliable way to convert the agreed USD salary or hourly rate into CAD at each pay period to check that it continues to meet or exceed the legal floor. If the exchange rate moves and the converted CAD value of the pay drops below minimum wage, your company has to fix the shortfall. The employee should not be the one eating exchange rate risk just to keep you compliant. Anchoring compensation in CAD versus USD. One way to reduce confusion is to anchor compensation in Canadian dollars in the employment contract. You state the legal salary or wage in CAD, even if you fund payroll from a USD account. On each pay date, you convert from CAD to USD at whatever rate your payroll system or bank uses and send the money accordingly. The employee sees a stable CAD number in their contract and on their pay information while you deal with currency conversion behind the scenes. The other way is to anchor the contract in USD and be explicit about how the conversion will work. In that model, you still have to test the CAD equivalent against Canadian minimums every pay period. Over time, that can be harder to manage if exchange rates move sharply. Payroll deductions are always calculated in CAD. Regardless of the currency of payment, Canadian payroll deductions are computed in Canadian dollars. Income tax, withholding, Canada pension plan contributions, and employment insurance premiums all rely on CAD values. That means your payroll system must convert the USD amount of each pay into CAD for deduction purposes, apply Canadian tax tables and contribution rates, and remit CAD to the tax authority. Year-end reporting shows income and deductions in CAD, not USD. For the government, everything is denominated in Canadian dollars, whether you pay employees in CAD, USD, or a mix. Employee experience and practical issues. From the employee's perspective, being paid in USD can feel attractive when the US dollar is strong and when they have USD expenses or savings goals. But most Canadian employees pay rent, groceries, and day-to-day bills in CAD. If you send USD into a Canadian account, the bank will convert at its own rate and may charge fees. If you pay into a USD account, employees shoulder the burden of converting when they need CAD. Over time, exchange rate swings can make take-home pay feel unstable. If you do not communicate clearly who bears which risks, trust can erode even if you are technically within the law. Banking, systems, and hidden complexity. On the operation side, paying in USD adds moving parts. Some payroll providers handle multi-currency pay smoothly, converting at predefined rates and still doing all calculations in CAD. Others are more rigid, designed around a single currency. If your systems cannot natively handle contract in CAD, funding in USD, you can end up patching around the software in ways that are fragile and error-prone. At that point, whatever simplicity you thought you were gaining by keeping everything in USD disappears. For many foreign employers, life is much easier when Canadian employees are simply paid in CAD, even if group reporting and treasury stay in USD. Communication in offers and contracts. However you handle currency, your offer letters and contracts need to be explicit. If you quote salary in USD, explain how it will be converted, how often, and what happens if the exchange rate moves dramatically. If you quote in CAD, say clearly that the legal obligation is in CAD, even if payroll funding happens in USD. Avoid vague statements like compensation will be roughly equivalent to X USD without hard numbers. Ambiguity around currency is a fertile ground for future disputes, especially when the employee's cost of living is in Canadian dollars. Final thoughts. A US company can pay Canadian employees in USD, but it cannot step outside Canadian rules by doing so. Minimum wage, overtime, vacation pay, and payroll deductions are all tested in Canadian dollars. For many employers, the cleanest approach is to set compensation in CAD and treat currency conversion as an internal finance issue. That keeps legal compliance and employee expectations simple, even if your books and bank accounts are mostly in USD. If you want a structured way to decide between CAD-anchored pay and USD-anchored pay for your Canadian team, you can explore more detailed guidance at www.theaccountingandtax.com. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.